the US markets then?
Absolutely. A very good morning to you, Shreyansi, and I'm sure it's going to be a good morning back home as well, given the fact that we had a good handover coming in from the US markets. Remember that you had that all-important Jackson Hole Symposium that took place last week or so, and you had that most awaited speech coming in from Jerome Powell, which actually made sure that the US markets rallied. And the reason being that there were dovish commentary coming in from the US Federal Reserve Chairperson, that is Jerome Powell, who solidified the expectation that the central bank will go ahead indeed and cut its rate in the month of September. That is just a few days later. This was, like I mentioned, a highly anticipated meet where in the Jackson Hole Economic Symposium, Jerome Powell that said, and I quote, "The time has come to lower the Fed funds target rate and the upside risks of inflation have diminished." And opposed that, you saw a sharp rally in the US markets with Dow seeing gains in upwards of about 1%, S&P 500 also seeing gains of about 1.15%, and Nasdaq, that was the one that led the pack, 1.5% uptick coming in for Nasdaq as well. Apart from that, you also had mega caps like Nvidia, Apple as well as Tesla, all of them seeing strong gains. If you look at the small caps, that is the Russell 2000 and the regional banks were the outperformers in trade on Friday, saw gains in upwards of about 3% for both of these indices. Talking about the rest of the week and how the US market actually performed for the rest of the week, you had S&P 500 that saw the gains of about 1.5%, you had Nasdaq saw gains of about 1.4%, your Dow that climbed about 1.3%. So all in all, Shreyansi, if you look at the US markets, solid comeback coming in from US markets, all thanks this time around to Federal Reserve Chairperson Jerome Powell.
Well, absolutely, all thanks to him, and that's also the picture that we're seeing shape up for oil markets as well, because when you take a look at US crude oil, you're looking at gains coming in of about 2% as the Federal Reserve indicated interest rate cuts are coming, but the prices fell for the week as slowing demand in China was something that the market was keeping an eye on. Now, like Cheryl mentioned, Fed Chairman Jerome Powell did talk about how this is the time that has come for policy to adjust as inflation has declined significantly, and lower interest rates typically stimulate economic growth and bolster oil demand. So that is the kind of handover that the markets are taking from all of this. But oil prices are still down for the week, like I mentioned, with the US benchmark falling 2.4%. When you take a look at global benchmark Brent as well, edging lower by 0.8% thereabout there as well. When you take a look at price moves, then WTI was around those $74 a barrel levels, and what you're seeing there as well is a 2.5% move coming in for WTI as well. When you take a look at the year-to-date move, though, US crude oil has gained 4.4%. Let's also take a quick look at Brent in terms of the price moves. Around those $79 per barrel levels is where that was at. Uptick of about 2.3% coming in for that one as well, and year-to-date that contract as well is ahead 2.6%. Now, traders have largely looked past volatile geopolitical tensions in the Middle East as well as adopted an increasingly bearish sentiment as oil demand also slows in China from EV sales and a softening economy. So that is largely the kind of backdrop that all of these price movements come against. Now, traders also speculate for weeks that Iran would retaliate against Israel over the assassination of a Hamas leader in Tehran, raising fears of a wider war that disrupts supplies as well. But an attack has not yet materialized, and that largely is another factor that oil market is looking very closely at. Now, let's also shift focus and take a look at gold prices, and gold prices climbed 1% as the dollar as well as the treasury yields retreated following that commentary coming in from the Fed signaling an interest rate cut in September. So when you take a look at spot gold, uptick of about 1% coming in, and it was off a record high that was hit earlier. Now, of course, the dollar index fell against its rivals, and that also makes gold more attractive for other currency holders. So that is also something that we're looking at in terms of where spot gold was at, Cheryl.
All right, so that's a roundup of what the global markets have been doing, be it the equity markets or the commodity markets. But what are the events to watch out for? Remember, the UK market is shut today. They have a stock exchange holiday as well as a bank holiday. Apart from that, you were expecting the China medium lending facility operations, which has indeed come out, and they have actually withdrawn the net 101 billion yuan MFL facility. They've kept the 1 year MLF interest rates unchanged at 2.3%. Apart from that, some of the corporate action to watch out for, you will have you have SBI Life, AGM, you have Seagull quarterly earnings as well. Apart from Raymond analyst meet at Wapi plant, you have Jindal Stainless EGM as well. Along with that, you will have to watch out for some of the IPOs. You will have the lock-in period that will end for Office Space Solutions. Apart from that, the other event, you have Wazir X, which will be opening up the rupee withdrawals partially after the $230 million hack. So these are the events to watch out for very closely today.
Well, absolutely, lots of events to keep an eye on. But let's take a closer look at commentary coming in from the Fed Chair Jerome Powell clears the air around policy stance, says the time has come for policy to adjust, alludes to a data-dependent approach for the much-anticipated rate cuts, also emphasizes on the diminished upside risks to inflation as risks to employment also rise. Let's go across and listen to a slice of what he had to say there.
We are attentive to the risks to both sides of our dual mandate. The time has come for policy to adjust. The direction of travel is clear, and the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. Our restrictive monetary policy helped restore balance between aggregate supply and demand, easing inflationary pressures and ensuring that inflation expectations remained well anchored. Inflation is now much closer to our objective, with prices having risen 2.5% over the past 12 months. After a pause earlier this year, progress toward our 2% objective has resumed. My confidence has grown that inflation is on a sustainable path back to 2%. Today, the labor market has cooled considerably from its formerly overheated state. The unemployment rate began to rise over a year ago and is now at 4.3%. Still low by historical standards, but almost a full percentage point above its level in early 2023. So far, rising unemployment has not been the result of elevated layoffs, as is typically the case in an economic downturn. Rather, the increase mainly reflects a substantial increase in the supply of workers and a slowdown from the previously frantic pace of hiring. Even so, the cooling in labor market conditions is unmistakable. Job gains remain solid, but have slowed this year. Labor market conditions are now less tight than just before the pandemic in 2019, a year when inflation ran below 2%. It seems unlikely that the labor market will be a source of elevated inflationary pressures anytime soon.
All right, and moving on, then July sales of the new single-family homes in the United States rose to their highest level in more than a year. Declining mortgage rates boosted demand, offerings more evidence that the housing market is recovering. The new home sales jumped about 10.6% to a seasonally adjusted annual rate of 739,000 units last month, the highest level since May 2023. It was also the sharpest increase in the sales since August 2022.
All right, keeping it with news flow from the United States, then the Chinese Commerce Ministry has said it strongly opposes US's decision to add multiple Chinese entities to the export control list over Russia-related issues. The United States added 105 Russian as well as Chinese firms to a trade restriction list over the alleged support of the Russian military. The companies, 42 Chinese, 63 Russian, and 18 from other countries were targeted for reasons from sending US electronics to Russian military-related parties to producing thousands of Shahed 136 drones for Russia to use in its invasion of Ukraine.
And meanwhile, global messaging app Telegram is in the spotlight after the founder and the Russian-born billionaire Pavel Durov was arrested in France on Saturday. In a company statement released on Sunday, the company condemned the notion that a platform's owner should be held responsible for the misuse of the platform, asserting that Durov has nothing to hide. Telegram abides by the EU laws, including the Digital Services Act. Its moderation is within the industry standards and constantly improving. This is what Telegram had to say in a statement on the detention of Durov in France.
Alright, moving on then, Asian countries have ramped up precautions after cases of the new deadlier strain of Mpox, Clade 1b, were found outside the African continent. At least 4 countries have recently reported Mpox cases outside the African continent: Thailand, Philippines, Sweden and Pakistan. Last week, Thailand confirmed the first case of the new deadlier strain. The WHO has declared a global public health emergency over the new variant, urging manufacturers to ramp up production of vaccines as well.
Alright, and those are all the top global headlines that you need to watch out for. But
If you like this video, then like, share and subscribe to ET Now.